Welcome to our weekly roundup of key economic and business developments in Sri Lanka. I'm Nishani Pigera, and here are this week's top stories. IMF says no need to change Sri Lanka's macro framework. Cabinet approves a state enterprise reform policy. CEB proposes 3% reduction in electricity tariffs. Tourist arrivals fall as peak season ends. In our top story this week, on Tuesday, Peter Brewer, IMF Senior Mission Chief for Sri Lanka, said that its initial observations of the country's development does not warrant a change to its macro framework. The IMF has projected a 3% contraction in the economy for 2023 and a 1.5% growth in 2024. Mr. Brewer also added that they are encouraging authorities to implement a domestic debt restructuring strategy soon and resolve uncertainty regarding the subject, as well as reduce interest rates. Whilst Krishna Srinivasan, IMF's Director of Asia and Pacific Department, who is also in the country, said that the IMF would not get involved in Sri Lanka's domestic debt restructuring process. This week, Sri Lanka's cabinet approved a state enterprise reform policy. According to Bandula Gunawardena, cabinet co-spokesperson, the aim is to transform state enterprises, thus reducing the burden on the country. He added that such enterprises need to be reformed to improve finances, economic variables, and balance of payments. He noted that agencies may have to be divested and invested productively, while some divisions may have to be closed. The Ceylon Electricity Board submitted a proposal to the Public Utilities Commission of Sri Lanka to lower electricity tariffs by 3%. To be effective from the 1st of July, it had considered actual generation data, actual price of units, the generation mix, and the forecast for 2023. This comes as PUCSL Chairman Janaka Ratnayaka stated that an immediate 20% reduction in electricity tariff is warranted given the drop in demand, lower exchange rate, and fuel prices. Meanwhile, the third generator of the Norochole coal power plant is to be shut down for 100 days from the 13th of June. According to Kanchana Wijesekara, Minister of Power and Energy, the plant will be shut for a scheduled major overhaul maintenance. He also added that this will not require power cuts to be imposed. With peak season ending in April, tourist arrivals to the country continue to fall. During the second week of May, only 17,699 visitors arrived, the lowest weekly total in the year. To date, almost 478,000 travelers have come to Sri Lanka. Daily arrivals fell to 2,578 in May so far. In the week, India was the main source market, accounting for 26% or 9,323, followed by Russia and the United Kingdom. Meanwhile, Priyantha Fernando, chairman of the Sri Lanka Tourism and Development Authority, speaking to the Daily Morning Business, said, despite May being the off-season month, Chinese arrivals are increasing and that it will pick up from July. As such, Air China, the national carrier of China, is to operate 3 weekly flights from July. And now let's take a look at the weekly movement of the All-Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all maturities fell. Bids amounting to 261 billion were received, of which 180 billion rupees were accepted. The Sri Lankan rupee steadily appreciated against the dollar this week, gaining 3% since last Friday as per the central bank's indicative mid-spot rate. In other market news, 4 listed subsidiaries of Singapore-based Good Hope Asia Holdings announced delisting from the Colombo Stock Exchange. The subsidiaries Good Hope, Indomalay, Selling-Sin and Shalimar have a combined market capitalization of about 22 billion rupees. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for more updates on economic and business developments in Sri Lanka. Until we see you again next week, thanks for watching. Stay safe.